Hey everybody, welcome to the Accounting 240 Coursepack walkthrough demo of problem 611. Here we go. Edith Billingsgate worked very hard during 2020 and had a very successful year. She has hired you to calculate her net income and provides the following information. Now notice she's asked for net income, not income from employment, not property income. She wants her total net income, which is going to have all these fun different elements in it now. Okay, I'm just going to jump ahead to see what the required is, because sometimes people will read through the problem and then start answering it without even knowing what the required is, and they'll do more work than they need to do. My advice to you guys out there, take this to the bank, read the required 5 times. 5. But Ryan, I don't have time to read it 5 times. Do you have time to take the course again? I think not. Read the required 5 times because you only have a finite amount of time and you need to know what you're supposed to be doing. Here's the required. Calculate her minimum net income for the current year. Great. Let's figure out what this lady's net income is. Boom. Let's start out here. Oh, somebody wants to enter the room. Should I let them? Okay. Total wages and commissions were $80,000. It doesn't distinguish between wages and commissions, and I don't care right now. I'm just going to plug that in to my formula here. So I've already written this down up here, but you guys would just write this down as you go. The reason I don't type it all out while we're here together is because it would take forever. So wages and commissions, $80,000. You guys need to pipe in if you have questions, okay? Is this part of her income? Of course it is. This is employment income. Note that I've got different areas up here, different segments for the different types of income. I'll start with employment income because this is the order I learned it in. Do you have to start with employment income? I don't care. Should you order things so that all your employment income items are together? Yes. Why? Because you would calculate employment income individually and separately from other forms of income. Also, you can try and keep in mind the people who are reviewing your work. In this case, it's me. Okay, but in the future, it could be some other instructor. Do not make it harder for them to mark things. I can guarantee you that the harder it is to mark things, the more likely it is that they're going to miss something. You want to make your solution as comprehensive as possible and as easy to mark. You need to start putting yourself in the mind frame of like, could somebody who was trying to figure out if I knew things, could they figure out if I knew things based on what I wrote down? So try and make things really organized. It's super important to being a successful accounting person. People who are in accounting, as I said before, they don't like uncertainty. They really don't. So you need to make things very clear. People didn't go into accounting because they like abstraction and vagueness and ambiguity. That's why you're here, guys, because you like black or white. Correct me if I'm wrong. Now, sadly, you'll start to learn that over time, the actual job, there's a lot more questions in there that are gray. There's most of what you do, and when you're like a higher up personnel in accounting, is like they're all gray areas, and that's why you are valuable, is because you're able to make those decisions. If all the questions in accounting were black and white, or in tax were black and white, no one would need you. It's true, they could just make the decisions for themselves. But when it gets into the gray area, that's when it becomes interesting, and people are willing to pay you. But for now, don't worry. Everything you have to do is black and white. This question, it's right or wrong. So here we go. We got the 80 grand. The next thing that's up here is her employer. So this is an inclusion. Everyone agrees. That's an inclusion. Remember I told you for tax, you just go through all the numbers and figure out, is it in or is it out? Let's see. Her employer told her that he had withheld $12,000 for tax, 2898 and 856 for her CPP and EI respectively. Okay. Do these numbers mean anything for tax purposes? For net income purposes, pardon me. Do we have to do anything with those? Carson says no, he's correct. None of these are deductions. You can't deduct any of these items. I'm not doing anything with any of them, okay? Nothing happens here. Bullet point 3, she received $10,000 from a previous employer in 2020. It was money, okay, I'm gonna highlight the 10 grand. We have to figure out what happens with this. It was money owed to her for 2017 wages. Okay, so flat out, the 10 grand, if you get $10,000 worth of wages, that goes in your income. It doesn't matter when you earned it. Because you got it now, I literally, before I talked to you guys, a friend of mine called me who is actually an accountant. And she didn't understand why her bonus from 2019 was included in her 2020 income. I'm like, well, when did you get it? She's like, I got it in 2020. I'm like, well, that's when you include it. How did you? And then I said, how are you an accountant again? And then she went off and did some other things. So, okay, so 10 grand. This gets included in income. Okay. And then the next part is fun. Somebody was asking me about this on the discussion board. So here it comes. All right. She received the money only after being successful in her lawsuit. What's her lawsuit? So her employer was also forced to reimburse her legal fees of $3,000 that were paid from 2017 to 2020. Okay. And there were questions pertaining to like, I don't understand where this $3,000 comes from or why we have to include it. Here's what happened. This employer, she earned $10,000 from this employer over a few years. The employer didn't pay her. She was pissed off about that, as anybody else would be. So she sued the employer. You guys know because we've talked about this, that if you are incurring legal fees to obtain owed compensation from an employer, you can deduct those legal fees. So she, over 2017, 2018, 2019, deducted $3,000. Okay. It reduced her income, which it's allowed to do. Now she gets $3,000 to cover her legal fees. Okay. That is not non-taxable income. There are very few forms of non-taxable income. Because she was able to deduct $3,000, she is now going to include $3,000, right? That will bump her income back up by $3,000. So over the years, she deducted $3,000 and now she's going to include $3,000. It is what we call a wash. There will ultimately be no tax implications for her over the course of those years because income goes down, income goes up. There's nothing, right? And so that's why that is included in her income. Okay, it is included because she took it as a deduction before. So now I'm going to make sure that I deduct or add that to income. All right. So here it is, legal. And this is like almost any amount of compensation you receive needs to be included in income. We know that, right? Except for a very few non-taxable benefits. Receiving payments from a former employer in respect of legal fees incurred to sue that employer is not tax-free income. All right, so $3,000. Da, 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 da. I mean, it literally says that, doesn't it? Oh, it doesn't say that. My apologies. It doesn't say that. Yeah, so Bob, great question. Thank you. And I thought it said that. And you have my apologies, all right, for making that assumption. Yeah, I mean, why wouldn't you? It's something that you're allowed to deduct. So is there any instance in which you were allowed to deduct something from income that you would not do so? And that's how I would frame it, is that, yeah, of course, like it's like any other allowable deduction for employees. Basically, the knowledge that that's testing is, did you know that was deductible? Right? And that's what I'm asking you with something like that. Like, did you get that was deductible? Right? And of course it was. Right? Because that's the number of, we covered off the things that were deductible and the things that weren't. And there's a very few, very, 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 very few items that are deductible from employment income, right? Otherwise, we'd all, as employees, be deducting everything. And this is one of those things. So yeah. Great question, Bob. Bob Zhu, you're killing it. Thanks, buddy. Yeah. If she got additional money for special damages or something like that, that part wouldn't be taxed, only the 10K and 3K. What's the 10K? Yeah, good question. So yeah, if you sue somebody for damages and then you're awarded damages for, like, I don't know, emotional trauma or something like that, what happens to that money? And the answer is, I don't know off the top of my head. I really don't. I have a feeling it's taxable, I think, but don't quote me on that. I'm going to edit this part out of the video because I don't know the answer. But if you remind me, I'll look it up and find out, which is going to involve me doing a Google search and being like, do you have to include this in income? And then I'll post that, which any one of you could do, but I don't know off the top of my head. I won't ask you about that, though. I'm assuming everything's taxable. Okay. But I don't know. Okay. Thanks, Tristan. I knew someone was going to ask that. And the whole time I was like, I hope nobody asks that because I don't know the answer. But this girl I was dating, she's getting started on her college instruction career. And one of the biggest fears that most people have is that they're not going to know the answer to a question in front of the class. To which I'm like, I know, it happens to me 7 times per class. Who cares? I don't know everything. And like, you just have to let go of the fact that you don't know everything, but you can find out the answer, right? So thanks, buddy. Next up, we've got Bullet Point Port. She paid, oh, I got a question about this too. This is so fun. She paid $500 for tuition fees, okay, for courses that were related to her job. Sweet. It's like me taking a $500 tax course. Hey, Camosun, I don't know anything about what happens when people receive legal compensation, so I'm going to take a tax course. And Camosun's going to be like, okay, great, have fun. And then I go and pay $500, right? She took the courses at the request of her. So Camosun's like, can you please take this course? And I'm like, all right, sure, I'll take it. How much is it? $500. And then they're like, okay, we'll give you 250. Oh, that's nice, thanks. So we got a couple things here to figure out. Number one, every time you pay money as an individual employee, the question is, can I deduct that? And here in this case, she paid to $500. And my question is, can she deduct that? And the answer is, of course not. Of course not. Just because it happens to be for work, it's still not a deduction from income. Okay, there are, again, this many things that can be deducted from employment income. You taking a course to advance your skill set at a job is not a deduction from employment income. How do I know that? Because it's not in the Income Tax Act. The Income Tax Act has a very small list, and this is not one of those things. So despite the fact that, and you can be like, well, it's for work and work made you do it. They didn't make her do it. They asked her to, and she decided to do it. Okay, it's still not, if you go and look through that T2200, which everybody filled out, right? You guys all filled out that T2200 form for your T4 project. Go and look at that. See if there's a line item on there for tuition for courses. Your employer cannot make you take a course and then you deduct that. What happens for tuition is that you get a tax credit. Tax credits, and you guys know this because you're in school. Unless your parents are paying for school, in which case you probably are signing over the tax credits to them. If your parents are doing the tax returns for you and themselves, guess what? They're stealing your tax credits. They're doing it, I promise you, okay? And if they're paying for your school, you probably shouldn't argue with them, but you could make a case for like, can I please keep those? Because it will be very valuable to you down the road. Anyway, education amounts spent are never deductible. They will be a tax credit. In this case, so the $500 is not a deduction. And then the second part is, well, they gave her $250. They paid for half of it. Now, when she receives money, you ask yourself, is that a benefit or not? Right? It's a benefit, but is it a taxable benefit? And we know that if you receive money in respect of courses that were taken that benefit the employer, that is not a taxable benefit. So the 250 is not included and the 500 is not deducted. Both of those numbers are nothing for tax purposes. Okay? So are there any additional questions about that, or did I explain it adequately? While you ask questions, I'm going to eat. Guys, I made a pumpkin pie. Delicious. No questions? I mean, I Googled the recipe. It was the first thing that came up. It's super easy, but it turned out great. Okay. Tristan Matthews, according to the Income Tax Act of 1985, I don't know what that is, but okay. Pain and suffering damages are not taxable. For example, compensation for emotional distress caused by a car accident is tax-free. Is this in Canada or is this in the States? I don't know. Just be careful when you Google tax stuff because sometimes it relates to America. That's usually the first stuff that comes up. Okay, awesome. Guys, did you get that? I think that's great. Tristan, thank you, sir. That's a good use of Google. That's like the way we want to use Google to find out information that's interesting to us. So it sounds like it's not taxable. So you guys can either go verify that or not verify it. Thanks, buddy. So let's continue on with this question. I'll probably edit all of this out when I go to the editing bay later on, whatever that is. So we're going to get to point 5 here. Edith really enjoyed her new car, especially because it was owned by the company. Guys, if the car is owned by the company, there is a standby charge. If Edith owned the car, there would be no standby charge. Is the standby charge on your exam? I don't remember. Let's see. Doobie doop doop boop boobie doo doop. Yes. Yes, it is. Are you surprised? Okay, so back to what we were doing. Edith really enjoyed her new car, especially because it was owned by the company. The capital cost of the car was $40,000 and was available to her throughout the year. She drove the car 50,000 kilometers, of which 30,000 kilometers were personal, which means 20,000 of them were employment related. Which is more? Well, it's more personal. If it's more personal, that means there is no standby charge reduction, which means your life is infinitely easier than it would have been if you had had to add in one more fraction. It sounds silly when I say it, right? It's not really that big of a deal. But in this case, you're going to have a very simple standby charge that you're going to have to calculate. You're also going to have to determine the operating cost benefit here, all right? So the operating cost benefit is also dead easy. So I'm going to go through and do the calculation on the standby charge. Now, people take like 10 minutes to calculate this. Here's what it is. It's the cost of the car times 0.02 times the number of months she had it. I'm done. That's my standby charge. That's the answer. Yeah, that's my standby charge. So now I've got to figure out the operating cost benefit. This also should take you 10 seconds. You're going to take the number of personal kilometers, 30,000 equals 30,000. You're going to times that by the rate for the year. Oh my God, you're done. It's $8,400. That's it. That's it. The standby charge and operating cost. They're finished now. So the total automobile benefit is 18. It is, isn't it? Yeah, it is. That's it. That's the end of that. So we're done with the standby charge. Now I'm going to go to point 6 here. Point 6 says Edith contributed $2,000 to her registered pension plan. Okay, that's the first thing. Edith has paid money. Your question to yourself is that deductible or not? And because it's RPP contributions, we know that it's deductible because that is one of the deductions that is allowed. So this reduces her employment income by $2,000. And we're happy because we like deductions, but you can see there's not that many of them. Also, please note that if you try to deduct the standby charge, I will give you no marks because you don't understand what it is. You can do the little calculation, which is literally multiplying one number by another by another. But if you show it as negative, you don't understand that it is a taxable benefit. And that is if you get the calculation wrong, but you include it as a positive value, I'll give you half marks. But if you get the calculation right, but you show me some negative number, I'm like, this person thinks this is a deduction. That is totally contrary to what we're doing. It's not only wrong, it is very wrong, because you're supposed to include it as a benefit, which increases tax. But what you will have done for your taxpayer friend here, Edith, is deduct it, which is grossly understating her taxable income, which is going to result in the CRA being super pissed and imposing interest and penalties and reassessing her. And then she's going to have to pay more tax. Guess who's getting fired? You as a tax preparer. So you need to ensure that you understand the standby charge is a taxable benefit. It is not a deduction, period. Okay? Are there questions about that? You just please don't deduct it. It is so wrong. It is doubly wrong. If you left it as 0, it is better to do because the ramifications will be less severe down the line. You would be better off doing nothing. Okay, so a group term life insurance. Okay, let's see what's next. So we've covered off this. And then her employer contributed $4,000. That's the next piece. Now again, you're flipping the switch here and saying, well, the employer paid for something, and you're not asking yourself if it's deductible. You're asking yourself if it's a taxable benefit. And employer RPP contributions are non-taxable benefits, period. All right, so that item is nothing. Now I'm going to go to point 7. The company paid $400 for $200,000 of group life insurance. You know how I can tell that people really don't know what tax is? They'll include the $200,000 in income. I'm just like, What? That's just the amount that you'll get paid if you die. That's not anything here. What if Edith died? Would that be included in her income? Sorry, Tristan, it wouldn't, but good guess. All right. Yeah, look, you had a coin flip and you went with the other one. No, because it's a taxable benefit, any amounts that are received are non-taxable. Right? So that's how that works. So cool. Anyway, the company paid 400 bucks. So when the company pays a thing, you have to ask yourself, is this taxable or not? And we know that life insurance premiums are taxable. So I'm going to include 400 bucks in Edith's income. Tristan, don't feel bad about it. Now we know the answer, right? Now, next up, point 8. In 2014 and 2015, she paid 1/2 of the $500 annual premiums for a sickness insurance plan, which means she paid $250 per year, meaning her employer must have paid the other $250. Okay. The premium was increased to $600 for the next 5 years. She also paid half of the premiums in these years. Okay. Let's be clear. The amounts that she paid are not deductible. That's what you have to ask yourself. Up here, there's 500 bucks. And you got to ask yourself, okay, if she's paying half of that, is it deductible? The answer is no. The employer's paying the other half. And you're asking yourself, is that taxable? And the answer is no. It's a non-taxable benefit because it's on the list of non-taxable benefits. So now it's the same thing over here, except instead of $250, it's $300. The treatment is the same. So there's nothing we have to do with this at this point. Now we go down to point 9. She was glad she had the sickness insurance benefit because she was sick during 2020. Who gets sick during 2020? Oh, it's like we knew. She got $5,000 of benefits in the year. Okay, so here's how the benefits work. She's getting $5,000 worth of benefits. That is included in income, right? That's a taxable benefit. But the amount of taxable benefit gets reduced by the amount of premiums that she has paid. Now, if I'm not incorrect, she paid $250, $250, $300, $300, $300, $300, $300, right? There were 5 years that she paid $300, and there were 2 years she paid $250. And I think I punched that in down here. Okay, so this is going to equal $5,000 minus 250 minus 250. That's 2014, 2015. Minus 300. That's 2016. Minus 300. That's 2017. Minus 300. Is that 2018? Am I off on the years? Probably. Minus 300. Minus 300. Let me just check. 16, 17, 18, 19, and 20. No, I nailed it. So let's see what that equals. I think that equals $3,000. Okay, that's the amount of taxable benefit. It's the amount that she received for being sick minus the premiums that she paid over the years. They're not deductible per se, but they reduce her taxable benefit. So she couldn't take those as deductions, but they reduced the amount of benefit that she had to include. All right, so that's point 9. We roll along to point 10. She also received $6,000 in non-eligible. It says ineligible. That's stupid. Non-eligible dividends. You get the gist, though. From the company shares in June 2020, just before she sold 1,000 shares for 25 bucks a share. Guys, there's some income ramifications we're going to have to deal with here. Now, these items, are they employment income? I think we're done with employment income. What we have here are 2 different types of income. We have property income, which is the non-eligible dividends, or ineligible if you want to call them that. So I'm going to jump down to property income, right? And because these dividends are non-eligible, and I just asked a dividend question, a softball question in 375, and like 3% of people remember to gross up their dividends. So the dividend income here is $6,000. And because they're non-eligible dividends, we're multiplying by 1.15. It's a 15% gross up. So this equals $6,000 times 1.15. And that's the amount of property income we have. We also here have capital gains. Just as a reminder, capital gains are not property income. Property income and capital gains are spelled and pronounced differently, and they represent different things. Property income is taxed. It has a 100% inclusion rate, and it is derived by passive use of your property. Capital gains are when you buy a thing and sell them for a higher price. Totally different, okay? Although I can see how you might think they were related. So for the taxable capital gains, which we're doing right here, and there's property income right here, we're just going to take our proceeds of disposition. Well, there's 1,000 shares. We sold them for 25 bucks a share, equals 25 star one, $25,000. Now we need to determine, well, what's the cost base? So I can figure out if I got a capital gain or not. It says, oh, the ACB is $27 per share. Sugar. Looks like I lost money on this. So equals negative $27 times 1,000 shares. Oh, guys, look at that. Well, the standby charge and like dividend formulas on the formula sheet. The standby charge, I don't know. You guys have the formula sheet. Is it on there? Go check it. I don't have it in front of me. So that question can be answered easily by just having a look at the formula sheet. I don't have it in front of me. I think the standby charge is on there. I don't know what the rates are, but like, let's see if we can memorize them. Non-eligible dividends, 15%. Eligible dividends, 38%. Hey, we're done. I think that that's a low bar to clear in terms of memorizing how to deal with dividends. They might be on there, though. I have no idea, but you can check them, okay? Okay, so I got a capital loss right here, but I can't apply the capital loss because I don't have any other capital gains. So the amount that goes in here is 0. What ultimately happens to this $2,000 is kind of what we talked about in that last question, where if you have capital gains in the last few years, last 3 years technically, right? Or if you have capital gains in the future, and the future goes to infinity, you could apply the losses at that point. But we can't deduct $2,000 this year. Tristan says it has them. It has both. It has dividends and standby charge. Super. There you go. So there you go, guys. You don't have to memorize the 15% and the 38%. But you should know those things. All right. So that's done. And then we've got 11. You tell Edith that your fee will be $1,000. You're the accountant. She says, no problem, as her employer. Guys, can you imagine if somebody paid you $1,000 to do this tax return? Oh my God, ka-ching. It's not very hard. Okay, that's awesome. Her employer paid $1,000 for tax prep fees in December 2020. Okay, if your employer gives you $1,000 so you can do your tax return, that's a taxable benefit. You cannot be like, oh, a free $1,000, cool. You paying $1,000 to do your tax return is your decision. It is something that you, as a taxpayer, are deciding to do. Every taxpayer presumably could prepare their own return, but some taxpayers make a decision to pay for their tax return. It is not a deductible expense. In this case, because your employer actually gave you $1,000, you have $1,000 taxable benefit here. All right, so I'm going to plug that into employment income. I thought we were done with it, but we're not. So $1,000 gets dumped in there. And then I'm going to move on to our final point here, which starts off with A. She was given a membership to a local health club when she started employment. Okay, she's given something, which means we have to figure out if it's taxable or not. The cost of the membership is $600 a year. She uses the club regularly, but never takes clients here. Hey, this is a taxable benefit, period. She just like, the work is like, here's $600. Go get into shape. All right. Well, I got free $600. I'm taxed on that. Is that bad? Who cares? You're going to pay what? 20% on that, 25% in tax. You're getting a $600 membership to a fitness club for $150. A taxable benefit is still a benefit. All right. What's next? She was reimbursed $2,000 for entertaining clients. All right. Now we've talked about reimbursements. Here's how this works. The employer's like, hey, Edith, can you take these clients out to what's entertaining clients? Oh, I know. Take the clients out to axe and grind and throw some axes. Okay. And then go and take them out for drinks after, not before you throw the axes, after the axes. And let's say the bill for that evening comes to $2,000. Great. And then Edith is like, I'm paying the $2,000. All right. And then the employer's like, hey, how much did it cost, Edith? And she's like, $2,000. And they're like, okay, here's $2,000. She is being reimbursed. That is not an allowance. It is a reimbursement. She incurred costs and was paid back directly for those costs. She paid nothing. She got to go to the axe throwing thing and get a bunch of drinks for free. The clients got to go out and do something fun, and hopefully the company earns some business. From Edith's perspective, there is no taxable benefit. There is no deduction. The end. And then the final item here is for a suggestion she made. What's the suggestion? Dear employer, I suggest you go straight to hell. No, she probably made a great suggestion about how they could improve the workplace. Cool. Then the employer was like, hey, thanks a lot. You get a trip to Tahiti. Oh man, wow, thanks a lot. I definitely want to go. And so Edith is like, sweet, I'm going to Tahiti. It's not a work-related trip. Her work paid for it, but it's not a work-related trip. It's a $4,500 trip. How long does that get you to Tahiti for? A week? Who knows? It's awesome. It's a benefit. It's a taxable benefit. Even because her employer was like, there you go, free trip. And she's like, woo, free trip. She has to pay tax on that. So I'm going to punch in the trip to Tahiti here. It's $4,500. And then it says calculate her minimum income for the year. But guys, it's done. Here it is. This is her income for tax purposes. Red, blue, green, blue, blue. 125, 400, bold, giant. That's it. Now there's some notes down here which explain literally every item that we talked about. But as far as I'm concerned, that answers that question. And that is the end of that one. Hey guys, thanks for watching this video. Did you find it helpful? Well, there's plenty more videos for you. Check these ones out right up here. And if you really found this helpful and you want to be updated of all the latest videos, why not hit subscribe? It's that button right over there. Check it out, guys. See you next time.